Hello everyone, I am Will Hassel and I am going to be presenting the long-term investing webinar. I would like to thank Rachel for allowing me to do this. I am a member of the Leaders Investment Club and I'm more the long-term type of a guy. Typically, normally I focus on kind of a 1 to 3 month time frame, but I also focus on multiple year time frame, and I'm going to talk a little bit more about this as I go throughout. But I'll mention some of the positions that I have on at this time in terms of their time frame and things like that. So I apologize for the yellow line. That has to do with the video software that I'm using. So thanks for watching. Why am I teaching this webinar? I have been investing in trading for 5 years. I first started off investing long-term and first started off in the spring of 08, so kind of still during the financial crisis. I have been managing my own trading and money for a little bit more than 2.5 years now. I have beaten the markets, whether it's from my single stock investment or multiple stock portfolio like I have now, 4 out of the 5 years. The only year that I really was down was the first year of managing my own money because I let commissions eat me alive. I'm a Leaders content contributor. I provide content for the Leaders Investment Club blog and my other blog, and I'm one of Business Insider's 20 Under 20. What is investing and trading? So when I typically teach people about learning the stock market and stuff like that, it's basically you're learning how to invest, meaning you want to go and buy a stock or several other different stocks and hope that they go on for the long term. I say stocks because you could go and buy something like an ETF, an exchange traded fund, where you go and buy a bundle of stocks that may go and perform like a stock index. I personally always have the QQQ, which is the Power Shares ETF for the NASDAQ 100, because the NASDAQ is typically made up of more tech-based names, and I like the growth that tech allows me to have. And so that's why I have that in my personal portfolio, because I think that sector is going to grow. You can do that with ETFs, and that's why ETFs I think are one of the good building blocks for building a portfolio and investing in is because you can go and monitor a specific sector that you like. So let's say you know retail very well, but you don't know a specific name. You can just invest in the retail sector. The difference between trading and investing is typically the time frame. Trading, you're looking at a much shorter time frame, whether you are a day trader where you just are in and out of stocks in a day or so and not holding them for a long time, or whether you trade them multiple day, multiple week time frame, versus investing is more of a multiple month to multiple year time frame. What are the markets? For some of the first time investors that I talk to, most of them don't really know what the markets are. The markets are various places where people buy and sell different securities. We have the bond market where people buy and sell bonds. We have various commodities markets where people buy and sell commodities like oil, gas, gold, different metals. And then we have the stock market and the option markets where people trade stocks or options. Options meaning certain contracts that perform to the stock on a certain amount of time. So these markets typically reflect the buying and selling of these different securities and assets. The major stock markets that you hear about are the Dow, the S&P, and the NASDAQ, like I mentioned, and these are kind of the household indexes. There are other indexes like the Russell 2000, which monitors small caps. Dow is a select number of companies, S&P is a select number of companies, and the NASDAQ is a select number of companies. And these markets are indices in which they are comprised of various amounts of stocks, and what you get with the performance of the index is the performance of all those stocks on the different average on which they are weighted. So we're focusing more on investing because most people, when they first start off, don't really have enough mental stamina to do trading, because trading is a very, very intense business and intense thing to go through. I don't recommend trading for people first off, because mostly you don't exactly know what you're doing. Like when I first started investing, I didn't really know what the stock markets are, or what really trading was, but I knew investing was, buying something that you thought was going to go up over time. So that's why I like focusing on investing, because most of us first time people are going to be investing. And we mainly start investing using stocks. And a stock is a security which signifies the ownership of a company and represents a claim to part of the corporation's assets and earnings. Nowadays, there are companies that just have a large amount of stock out there. You have companies like Apple that have tens of millions of shares. So, when you own one share of Apple, you are technically owning a part of the company, just not a very big part of the company. Whereas you can find smaller companies which have a smaller float of stock which you can earn. How do you invest? Normally, you invest by buying or selling in this case, a stock. And you think that stock will increase and grow over time in terms of its value. And you buy these stocks through a stock broker. They are people or websites in which you can buy or sell these stocks. And they are licensed to do so. They have special licenses that allows them to buy and sell stocks. These firms do charge commission for every time you buy and sell a stock or other various securities. This is how the firm makes money. And these commissions do vary from firm to firm. Sometimes, if you're with a particular bank and they have an investment branch of it, like an easy example of this would be Wells Fargo has an investing side of it, Bank of America has an investing side of it. And sometimes you can get lower rates because you're already a part of that bank than you can with an online broker. So, and also the fee structures change. With a bank, or you may get a certain percent of what you earn off of that stock is what their commission is, versus an online broker that charges a single amount per trade. I use Scottrade, so I have to pay $7 every time I either buy or sell a stock, so I have to make at least $14 in order to make money. So when you're selecting a stock, one of the things that I first started to do when I was looking at what stocks I was kind of interested in was companies that I really liked. Now I have to warn you, starting off with companies that you are very fond of don't always work out. A prime example of this for me is BlackBerry. I love BlackBerry phones, but unfortunately the company is not very good. And their stock price doesn't perform very well. Or you could like JCPenney, which has a very poor performing stock price as well. So, investing in what you like doesn't always work out. That's why you have to do your homework. And I recommend, investing in things that you know first off. Like if you like Starbucks and you know the business well, invest in Starbucks or Apple. Start off with looking at companies that you enjoy and that you know about. When investing in a company, I typically look for fundamentals. I'm more of a fundamental guy versus people that look at charts and technical analysis. And for some of these key things to look at are price to earnings, which is the price of the stock divided by its earnings. Also its revenue, how much cash it gets in. Earnings per share, the amount that it earns per share of stock. The dividend, how much money you're getting paid to just sit and hold the stock. There are typically what are called defensive names have a higher dividend, such as AT&T has about a 4% dividend. So that means you earn 4% of whatever it is you have, whatever dollar amount you have in the stock, you get just sitting there. Typically, that means that the stock doesn't do a whole lot because you are earning that amount of dividend per quarter. You also look at the market cap, how big the company is. Like Apple, which has a very big market cap of almost $500 billion. You also look at earnings compared to its peers. Did Apple do as well as Samsung? Did Sony do as well as Samsung? Various examples like that. And I also want to look at things like cash flow, how much cash they're bringing in and out, and how well do they use that cash. And make sure to do your research. Make sure you know what the company does, and make sure you just learn the basics about the company. Make sure you know what they do. You don't want to invest in something where you have no idea what it does. This is a stock chart. I find stock charts on a really good website to find free stock charts is freestockcharts.com. This chart was as of December 13th, 2013, and it's of Starbucks. These are two different stock charts. On the left, we have what's typically called a line chart, which is just a straight line, and Free Stock Charts does a good job of showing you when it has down days and up days, so you go and track it by month. This is a year-to-date chart, with 1 month on the x-axis and then the price on the y-axis. Now over here we have what's called a candlestick chart, which is every single move is done by a little tiny mark, which kind of looks like a candlestick, which is why it's called a candlestick chart. Like if you can see right there, it has a little line that has a kind of a rectangle right there, and that shows the day-to-day moves in terms of each candlestick, the range that it did on that day. So on this candlestick right here, the red one, you can see it went down to the bottom there and up to the bottom there, but finished right there. And some people like candlesticks better than lines. Mostly candlesticks are used for more technical analysis and traders, but can also be used for investors. When you start getting out into multiple year charts and you're looking at it in a 1 month frame for multiple years, it can help out a little bit more. Stock price. The stock price means what the stock is currently valued is valued out by the market. Meaning shares such as Tesla, which is about $200 a share right now, is worth $200 a share because the market sees that it's that valuable. This means that the price of the company is set above or below. This means that the price of the company can be set above and below what the overall fundamentals are, or what the evaluation of the company is. So that means the revenues, cash flow, and things like that. A good example of this is Tesla, which means it's got a very high stock price for a company that has very, very, very stretched out evaluations, meaning, in my personal opinion, and on most people's opinion, Tesla has a higher stock price than what the company is actually worth. But when you look at a stock quote, and I'll pull one up here in a second, you look at what's called the bid and the ask. The prices that you see below what the stock price in between the two is what is at the market. Meaning that is the market that you see. Between the two numbers signifies what the market is willing to pay. And as you can see on this next chart, it's a bid and ask chart, or what is known as a level 2, which most day traders use to go and get access to the various stock exchanges. As you can see, NASDAQ, BATS, NYSE, those are from the different exchanges. And what the bid is it's where people want to sell, whereas the ask is what people are willing to buy at. So between the bid and the ask is where you have your current market price. So when you see the bid at 64 and the ask at 65, you get your market of your last price of 44.65. And this is what we mean by what the market is evaluating it at. Because as you see, some people have lower bids at 44.58, then you see higher ask at 44.89. And we find what the two closest bid and ask are in order to get what the stock price is. That's why you have the 44.65, because it's 64 and then 65, not 64 and 44.77. Places to find these various different types of information, whether it be stock quotes, stock charts, and evaluations of the company are CNBC, Bloomberg, Yahoo Finance, which is a good one. Investopedia is another great site to go and look at, and your bank. Normally, if you have a brokerage account with your bank, as I mentioned, you'll find that your bank normally has a page to go and monitor your brokerage page, and has kind of an investing section where you can look all this up, as well as like an online broker that you sign up with. Okay, so you've picked the stock, and now what? Before you place the trade, meaning buying or selling the security, you want to have a plan for when you want to get out or lighten up your position. So, because sometimes we like to take profits. You also want to know how much money you're willing to put into it. I suggest you put in enough money that you can afford to lose. Normally this means about $500 in a certain stock for your first time. Now this doesn't include commission. And after you've figured all this out, you can then buy the stock. I say $500 because mostly and beginning investors don't want to lose a whole lot of money, and $500 allows you to find a good company and what you can buy a decent amount of shares for. $500 means you can't go out and just buy a couple shares of Apple because Apple trades over $500. But it does allow you to go and buy shares in things like various ETFs or a company like Starbucks, which trades at about $75 right now, so you can buy a couple shares of that. And it's really a dollar amount that allows you just to get your feet wet and just to kind of start out slow into the market. When we talk about a plan, it means, what happens if your stock has a very good earnings and you want to take some off the table, you want to get some money that you made from the stock off. Keeping track of your stock. You want to be an informed investor. You need to know what happens to your stock, what news comes out, if it's good, bad, and you want to keep up with the performance of your stock, especially through various different time frames. Because you're not going to make any money in investing if you don't keep track of your stock. You need to know what happens because you do have some type of money on that security. So you don't want to just leave your money just wandering off. You want to pay attention to it. So in case a whole lot of bad news comes in or a bad quarter happens, meaning they report bad earnings, that you don't just want to see the stock tumble and not know about it. You want to know when things like that happen. And the easiest way to track the price is looking at the price at the end of each day, week, or possibly month, and then looking at a chart of it. Now more than ever, it's become very easy to keep track of stocks. I remember when I first started investing, what I did was I made a virtual portfolio on Yahoo Finance and kept track of different stocks like that. Most people have iPhones or have a smartphone. You can go and keep track of your stocks on there. In fact, I know on the iPhone there's a little section that says stocks, and it's not that hard just to click on the app every day. What to expect when you've invested is pain. You will lose money. You will lose money. It happens to everyone. No one has ever continuously made money on stocks. They have ended up investing or trading in a loser and have lost money because of it. Your stock will not go up every day. Mostly, your stock will not go up every day. Sometimes, like this previous year, it might or very close to will. There are some stocks last year that barely went down on particular days, but mostly stocks don't go up every single day of the year. You'll have joy because if your stock does go up, you will be making money, and everybody loves making money. There will be days when your stock isn't doing well. There will be days when the markets overall are doing very well, but because your stock may have had a piece of news come out that said, like for Starbucks, not many people were going to the stores for a certain amount of time. And that may cause the stock to go down when the overall markets are going up. So this will make you be angry. You will be angry that your stock isn't performing up to your hopes and expectations. But you want to go and kind of keep all these things in mind as soon as you start buying or selling or looking at stocks. Some of this will follow through with investing. you sometimes will invest in losers if you don't do your homework right. And you will have days when you feel like you have made a terrible decision because you invested in that company. But if you keep looking at the research that you did, and if it all checks out and it still makes sense and it's still very good research and the company is still very solid, you will most likely get a company that ends up being a winner. Just maybe not for that day or week. I've had multiple times where I have thought I was a complete and utter idiot because I was down a whole lot that one day, and then the next day the stock went up. In one case it was Tesla, the trading day before earnings. It was down a whole lot. I was down about $200 in Tesla alone. And by the end of the day, I had made all of that back and more because it reported good earnings. And this takes me to taking some profits. I mean, it does make sense to take some money off the table if you've made 20 or 30% in one particular stock. A great case of this is in Michael Kors, which went up 20% in one day this year because they reported very good earnings. And I did take about half my position off the table because I had made a very large amount of money. I had made about over 21% in the stock. And I did so because I don't want the market to take back the money that it's given to me. I put in an amount of money at about $75 a share for Michael Kors, and it traded all the way up to about 92. I don't want to give the market back the money that it's given to me. I want to keep as much money that the market's given to me as possible. And that's why I said making a goal is very important, because you want to be able to have points where you say, okay, if it goes up 20%, I'm going to take this amount off. If it goes up 50%, I'm going to take this amount off. Keep some of your position off the table when you get very big profits. Like this last year, if you made 30% in a particular stock over the year, it makes sense to take some of that off the table because you want to bring back some of the money that you've made and let some of the house money or the money that the market's made you just kind of sit there because you've already made back the money that you originally invested in. What to look for in a particular stock. These are some of the things that I look for, that I personally look for. Management. I make sure to see if management actually knows what they're doing when it comes to the company. Some very good management that I have seen in companies is Jamie Dimon of J.P. Morgan and Chase, Lloyd Blankfeld of Goldman Sachs, Howard Schultz of Starbucks are all very good CEOs. You want to look at the balance sheet. Does the business make sense? Does the financials all add up? Is it spending more than it takes in earnings? How much cash is it coming in and out? That's why I come down and when we look at the business, does the business make sense? Can we see the business continue? Does the company do things with the cash it has? I have to say I'm not a huge fan of Apple because of this reason. Apple has an extremely large cash pile of cash that it does almost nothing with. You can make kind of the same case for Google, but they still buy out companies with the cash it has. Apple does very little with the cash that it has on hand. Stocks I'm personally in at the moment are QQQ, which is the NASDAQ 100 ETF, JPM, JP Morgan, Visa, which is Visa, the credit card company, AIG, which is one of the world's largest insurers, SBUX, Starbucks, which is Starbucks Corporation, Kors, which is Michael Kors, and then I'm also in another ETF called HDGE, which is a ETF that performs in bear market type of conditions. I have that in there as a hedge, just so in case a bad day comes, my entire portfolio isn't wrecked. Popular stocks that people seem to always hear about, or people will likely know: Facebook, Twitter, Amazon, Apple, Google, Netflix, Tesla, companies that people know and are familiar with, along with Starbucks and Nike and Under Armour. Tools that can help you with investing. Investopedia, great company. You can type in things if you have questions and they will come up. I've used it for certain aspects of investing and researching what some things are. CNNBC.com, Bloomberg.com, Yahoo Finance. They all have, parts where you can research what a company is and what their news is and research the stock quote. All these have websites and apps that you can go and use. And then me, I am more than happy to go and answer any questions that you may have. I get them all the time from Twitter, from StockTwits, from emails, and I have people at my school and adults that actually come to me and ask me what I think of a particular company. I'm more than happy to go and to answer the questions that you may have. And finally, what investing can do for you. Make money. Everyone likes to make money. You can get experience with the markets before actually really testing them out. You can learn what people do or don't do years before most people. Meaning, most people, when they actually get a good sense of what investing isn't until their 50s and 60s when they've been doing it for a while. Whereas if you start earlier on, you can actually learn how to do things a whole lot more. You'll get some failures early on. You can learn more about business and how the economy works. You also learn more about a company when you invest in it than you ever would have thought imaginable. I know now more about the fashion industry because I own Michael Kors. I know more about retail and food because I invested in Starbucks. And I've learned a whole lot about companies because I've thought about investing with them. And the knowledge that you learn is incredible. And I would like to wrap this up by saying thank you for taking time to watch this. And once again, thank you to Rachel for allowing me to do this. And if you have any questions, please send them to @WILL, HASSELL, on Twitter, and that same address for email, I'll go and write it here on the notes. That's for my email. It is willhassellws@mail.com or willhassellws for my Twitter handle, @willhassellws for my Twitter handle. And I would like to just once again thank you all for watching.